Hey everybody, Cowboy here. Today we take a look at the difference between retail and institutional traders and how that moves markets. There's more about what we do and how to find us after the video clip, and also at the bottom of the screen there's the website and the QR code. Go ahead and visit us. In the meantime, enjoy the show. Well, let's talk about going long, because that's easier for people to conceptualize, like for beginners, right? So price is going like this, and it starts to go up, and then it comes back down, and it really wants to go up, and the whole market thinks the price wants to go up right now. Okay, so that's what the market kind of sentiment in this example says. Think the price is going to go up. Okay, so people go long. People bet on the price going up, and when they do that, what they're going to do is they're going to have a stop loss, which is where basically if the trade goes against them, then they're going to get out of the trade, right? If they start to lose money, then if price heads down too far, they're going to get out. It'll be at the bottom of this box where the blue is. And as long as you're in the blue area, you're losing money. And then let's just say they think price will go up to here, up to the top where this green box is. And so what they're planning on is for price to make its way up to the top, and then they'll get out up here at the top of the green box where they're going to make some money. However, if price goes against you, you're gonna want to get out of the trade and cut your losses. You keep going down and down and down, and you just keep losing money. That doesn't make any sense in trading, right? As a trader, I take measure moves. I will measure where I think price is going to go, and then I will measure, or if price goes too far against me, I'm going to get out. That's how I do things. So that's pretty much what trading is for the most part. You have different people who do different things, but that's the most common method of trading, certainly. So that being the case, down here where people are going to get out, that's a sell order, right? So when you buy right here, that's a buy order. And when you get to the top, you sell. Simple, right? Buy low, sell high. But when you get out at the bottom, it's also a sell order. You bought here, and now you're going to sell lower because you need to cut your losses. Now, when you sell, right, way down here where this line is, when you sell, that's going to push price down. Think about it. That's just how it is with markets. If you buy, you're pushing price up. If you sell, you're pushing price down. Well, most people are going to have their stop losses in a similar place because of the way the market works. So if a bunch of people sell right here, it's going to push the price down. Okay. Well, there are these people out there, and they're called market makers, if you will. And these are people who basically will, they're the liquidity providers. They are the people who oftentimes are running exchanges, and they have, or what they'll do is they'll kind of trade against everybody, and they'll get paid by the exchange to do it. They get a certain percentage, and they make money by essentially, and this isn't like, to say it very simply without explaining all the mechanism, they make money by pushing price towards liquidity. Okay, so if you find a liquidity node and you push price towards that liquidity node, then you will be able to make some money. And the liquidity nodes are found on Kingfisher, and the reason they're there is because of all the stop losses. Or it might be where these, the way it's measured on Kingfisher is it's where these leveraged trades liquidate. Okay, so either way, it's a sell order because the exchange is going to sell for you. Okay, so liquidation occurs when you're using leverage, and I'm not going to get into it, but I'm not going to explain that too far today, but it's going to effectively be a sell order. And it's whether you're doing it as a stop loss or the exchange does it as liquidation to get you out of the trade. Because when you use leverage, you can't go too far against your trade. The exchange will take you out of that trade, and they're going to sell you out of that position. And when price gets to a liquidation point, that's where a lot of people make money. Okay, so price will eventually be pushed there, because look, when you're looking at the market, the way this works is that retail, the normal person, they're the ones that get kind of bilked. They don't, most retail loses, right? And retail looks like this. And when the big boys come into trade, it looks like that. And it looks like that. And then retail is doing this. Retail is just kind of buying back and forth because they don't have a lot of money. And the big boys come in and it looks like this. And then it looks like that. Okay? And this is retail. So if I were to take this concept and move it over to the real chart, then what that's going to look like is this. Let's delete all this other stuff. And we'll go back to here. And we'll delete all this other stuff here. Hold on. Okay. So to look at it on the real-time chart, all this like little price movement where price is just kind of ranging a bit, that's retail. Okay, that's just regular blow Joe. That's you and me. That's not those people with the $5 million accounts that are trading, $50,000 at a time or whatever the number is. That's just, but you see this big move, like I showed you. Let me jump down to a lower time frame. Give me a second. Like that big move, that liquidation move that I predicted on the show. So this big sucker right here, that's the big money coming in to push price to liquidation points. That's what that is. And a lot of times they don't have to do all this. They can just get the market to do it for them. They start the move. They start with the bigger, they push to a certain point and then the market takes over, right? So that's momentum ignition algorithms, things like that. But essentially that's when the big boys kick in. And then when the big boys are done, then you get this same kind of motion right here. Just kind of not much going on. So we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.